let's discuss the government programs that could change a lot of what we're talking about. So I know the $2 trillion stimulus package had some component of it that was applicable to people that have mortgages, not just investors, but homeowners themselves. But from what I understood, it was only people who have mortgages through Fannie and Freddie, or when the debt has been sold to Fannie and Freddie. Can you expand on that?
Yeah, this is all pretty new, so forgive me that I do not have like super specific details. But basically, conceptually speaking, the government-backed debt, the meaning pseudo-government-backed or whatever. Okay, the agency loans, Fannie Mae,
GSE,
Freddie
yeah.
Mac, the government-sponsored entities, and then also VA and FHA. Okay, that are two more, right? Um, Basically, if you're listening to this and you have one of those mortgages, and you probably do.
Yeah.
Almost everybody listening has one of those types of mortgages. They're the vast majority of all mortgages. Okay, you can get a forbearance. Okay, meaning what a forbearance means is that they're not waiving the payments, but literally by contacting your lender and saying, due to economic circumstances, that's like all you have to say. It's incredibly easy. You don't have to give them your tax returns. You don't have to, give them a hardship letter. You don't have to tell them that you lost your job or anything. Like, it's
No
amazing.
verification, yeah.
Nothing. They will give you a forbearance easily for 90 days, meaning you can skip the next 3 payments. Probably not much harder to get it for 6 months or even 1 year.
Right.
Okay. So they will just take those payments and tack them on the back of a loan. They won't report any negative reporting to your credit bureaus. Okay. And be sure by the way, if you're a good consumer, investor, borrower, always check your own credit score. Okay, do not ever leave it to the lenders. You should subscribe to one of those services that allow you to check it. Okay, and so that's your bailout. Get your bailout. Now, there's a lot more we can talk about because I'm sure many of your listeners could qualify for the SBA financing for their business. Okay, and there's more bailouts than just the real estate stuff. But yeah, the real estate is pretty easy, and I think the bailout that's being offered today, the forbearance, is going to, there will be another round. It's even going to be better.
So how do you think that will affect nominal prices, going back to what we were just talking about with the three markets?
Um, I haven't thought much about that. So
Or
it'll allow people, it'll slow any decline.
You're right.
Okay, because it will allow people who would be in peril to not be in peril
Yeah.
because they're not paying. Okay,
Right.
so yeah.
So, and then to add on to that, I think it's a misconception that some people have. Let's just say 100% of mortgage holders stop paying their mortgage right now, today.
Yep.
I think it's a misconception in the general public that everyone would be kicked out of their house in like 30 days, like a renter. But I think they need to understand that foreclosure process can take a long time. And I know it's different from state to state.
Right.
And not only combining that on top of what you said earlier with the bank coming in and maybe adjusting the loan, a modification, maybe the government comes out and says, okay, time out here, guys, we're going to try to the Homeowner Act or something where banks were not allowing you to foreclose for at least a year on top of the forbearance that you just spoke of.
Yep.
So how would that potentially play out?
Well, actually, kind of tying it in with our previous conversation of owning versus renting, this is one of the advantages of owning, is that you can play the game with your mortgage company. Okay, and you mentioned rightly so, George, that it depends on the state. Okay, some states the foreclosure process works pretty quickly. California, for example, it's 121 days.
Okay.
Okay. But they never really go that fast in real life, but they can go that fast. They can't do it now because there's a moratorium. But generally speaking, it's a 90-day period of when you can make up the back payments. And then there's a 21-day period after that where you have to pay the entire balance. Uh, that's the legal requirement, but the reality is usually different. Okay.
Right.
Especially if you don't have much equity, then the reality is much more in your favor, so you can negotiate with lender. But in places like New York and Florida, and I live in Florida, by the way, they have to do judicial foreclosures, meaning they basically, when they foreclose on you, they have to sue you.
Right.
Okay.
Yep.
And that can take 2-3 years. Okay. I mean, it's people last time around in the Great Recession, they were sitting in their houses not making a payment for a year, 2 years, 3 years sometimes.
Right.
Even there are even cases that are longer than that. And I know of one, a friend of a friend's in California that's been still, even in the booming market, for some reason the lender hasn't foreclosed. They've been sitting in that house like 10 years without making a payment. I mean, how ridiculous. Talk about moral hazard. This is the moral hazard of moral hazards.
Yeah, so the point is, not only do we have this 1-year moratorium where you don't have to make or make delayed payments, then on top of that, it could be, let's call it another 6 months to maybe even another 2 years before those people get kicked out of their homes if they stop making payments today.
Right.
Or if they didn't have the money to pay starting today. So it's like a giant ship that it's very difficult for real estate prices to just drop by 50% in 2 weeks like a stock market or something.
It's a much slower, more gradual process, which is great for investors. You can think, you can make decisions. It's not high frequency trading. It's the exact opposite of that. Okay.